What is going on, everybody? Welcome to another tutorial video. In this video, what we're going to be doing is just building on what we've been working on, and that is using Pandas to do some data analysis and modeling with our sentiment analysis dataset, and then we actually want to formulate a strategy. The best strategy, or I guess the easiest strategy right out of the gate, would be to work with some sort of moving average crossover of the sentiment valuation. So the sentiment that we get is just a raw sentiment value. So really early on we plotted a 500 moving average, okay, and we're kind of happy with that 500 moving average, but it's really hard for us to calculate programming wise whether or not that's an increasing trend, decreasing trend, how strong is that trend, and so on. So we can use moving averages to sort of do that. It's a crude way of doing it, but it's decent enough. So to start, I say that we do based on moving average crossovers. So the easiest way is to have, let's say, 4 moving averages, and depending on where each of those moving averages is at the time, that's a strength. Okay. Now this presents a problem right out of the gate for us. The default data that we have in this file is 100, 250, 500, 5000. Now for most stocks, something around there is about right. That's about what we want to use. But for still many stocks, that's not right. So the best way to think of this is a company like Apple. So Apple has a lot of updates every day. So 100, 250, 500, 5000 is actually not large enough moving averages to accommodate a company that's talked about as often as Apple. Same with Google, stuff like that. And then we have other companies like, let's say, trying to think of a good example of something that's not talked about too often, but I don't know, like Arch Coal or something, ACI. That company isn't talked about as often as something like Google or Apple, or even as often as something like Groupon or Bank of America or something like this, where these companies fit very nicely into the 100, 250, 500, 5000. So with that in mind, I thought, well, since, for example, Bank of America is a decent company that fits in, we can use Bank of America as a sort of guiding stock. Okay, so what I was thinking we could do is we can generate a sort of dynamic moving average based on the number of updates a stock gets. So that's what we're going to be doing. So let's go ahead and get into how we're going to do that. So first of all, we have outlier fixing here from the last video. I'm just going to not call it that function. We can leave that there just for kicks later on, but I'm not going to call it. Now we have single stock. We could leave that there as well. But I'm actually going to go ahead and just delete this entire function because we'll never use that. I won't use it again. If you want to save it for reference later, go ahead. So delete. So let's make some space here, and actually let's make some more space so it's using the window properly. And so we're going to define single stock auto MA. Kind of a long function name, but defines kind of what we're doing here. And then we can do stock underscore name. And now we can begin to work on this function. So to start, we probably shouldn't have gotten rid of that data right away, but I guess we can copy it from here. So we're going to go up to outlier fixing. We're going to take the whole stock name lower part and the whole, what data are we grabbing. Just copy that, come down here, paste. So now we have that data. Now what we want to do is, we said we're going to use Bank of America as an example. So what we can do here is we can say count equals df type dot value counts, and then we can do count equals int count stock name. And actually we would only have one value count, so I guess we didn't really even need to do that. But anyway, let's go ahead and print count just to see it. So we'll copy this, paste it here, and we'll say the stock we want to do is Bank of America because we said that was the guiding one that we wanted to work with. So let's go ahead and run that, and we'll wait a moment, and whenever it's done, it'll print the count. And then what we'll do is, since we said we liked 100, 250, 500, 5000 for a company like Bank of America, we'll use that as a guiding factor. So while we're waiting on this, the reason why we don't necessarily, okay, we got the answer. what happens a lot of times whenever people backtest and test a strategy is they know kind of what they want to do, but they're not sure about the exact value. So we can use backtesting in computers to find us like the perfect value, okay? And we might do that later on, but the problem is we could backtest and use our computer to find the perfect value for every stock. Now we don't want to do that because that's data snooping, and that's bad, because if you want your computer to find the perfect answer for you, the computer will. It's very simple to find the perfect answer. But the problem with this is that's only the perfect answer for that exact data set, but then when you start to branch out, it's almost always not the perfect answer, and it's kind of a bad practice to do that. So the best thing that we can do is we can start with our assumption that 100, 250, 500, 5000 is a good for Bank of America numbers, and if that doesn't work out very well, what we can do is we could take Bank of America, we can find the perfect numbers for Bank of America, and then we can apply this to the rest of the companies. And by that I mean, what we're going to do is we're going to take excuse me. We're going to take 27,629. We're going to assume that 100, 250, 500, 5,000 are good moving averages for Bank of America. So what we do is we can take, let me pull up a calculator here. Let's see. Here we can take 27,629, and we can ask, well, let's say for a 100 moving average, we can divide that by 100, and we get 276.29. Okay, so, oh, that was stupid. I can't believe I even did that math. But anyways, we get 276.29. So again, we could do 276.29, and then for 250, we can divide it by 250, and we see, okay, about 110. Okay, so the way that we can work with this is we can say, I can come down here and make some space here, and we can say, for example, MA1 equals, we don't need to print count anymore, and I think we just, okay, so MA1 equals PD.rolling underscore mean, and what do we want to do that to? We want to do it to DF value, and we're going to do the actual moving average here will be count divided by, and that first number is 276, let's do 275, right? So divided by 275, okay? So that'll produce the moving average, the 100 MA, based on the number of updates this company gets, okay? So count. Now, and this will be dynamic for every stock, right? Because every stock will have a different number of updates, okay? So this will be kind of like the perfect, so to speak, at least that we're going to put this, we're going to make up our own value. So we don't have any sort of data bias here that we've kind of generated via data snooping. But again, down the road, it might make sense to perform some data snooping on Bank of America and then apply it to the rest of the stocks without doing it on the rest of the stocks. And that pretty much leaves us without any major bias. But for now, we'll just start with this. So now MA2 PD.rolling underscore mean DF value. We're totally copy and paste next time instead of typing all this out. And count, and then this one was 110, okay? And now let's just copy and paste this twice so we don't have to write that again. Paste, paste. MA2, this is MA3, MA4. And now we come back over here, and what was our count again? 27,629. So, oops, let me minimize this. So 27,629 divided by 500 was 55, and then let's just do it again. 27,629 divided by 5,000, 5.5. Okay. So we come back over here. This will be divided by 55, and this will be divided by 5.5. Now, because we're using a decimal here, and keep in mind we're in Python 2.7, so count will always be a full number, right? It's going to be a whole number. So these will generate. This will generate a whole number. This will generate a whole number. This will generate a whole number. This is going to generate a decimal for us. So in Python 2.7, just keep in mind this is going to give us a decimal. If you were trying to do this tutorial in Python 3 and you're just converting what you need to, keep in mind that all of these will produce a decimal, and you might want to round that decimal because we're going to use a label later on. I'll talk about this again in a moment. We're going to use labeling, And on your graph, you might at least want to, it doesn't matter if the moving average is a decimal behind the scenes, but as far as when you plot up on the label, you're going to want to cut that decimal a little bit. Otherwise, it's going to take up the whole screen. So anyways, moving on. Let's go ahead and plot this. So we're going to say ax1 equals plt.subplot, and this is going to be a 2 by 1 by 1, and I'm sorry, 2 by 1 plot number 1. I always say that. And then df close plot, and then we're going to call this label equals price. Good enough. So that's going to plot up our price, our stock price on the top chart. On the bottom chart, let's plot the sentiment. So let's say ax2 equals plt.subplot. Again, it's going to be a 2 by 1. This time it's going to be chart number 2. And what are we plotting here? Well, we're going to do ma1.plot label equals, and in this case we need to translate this to a string. So we're going to say label equals 2 parentheses there, string, and then count divided by 275 plus MA. So basically it's going to say whatever that division is plus MA. Now, again, if you're on Python 3, you're going to want to actually do what we're about to do for the MA4, but we'll get to that in just a moment. So let me copy this. Oops. Copy that. Paste, paste, paste. MA2, 3, and 4. Now this was divided by 275. This is divided by 110, 55, and 5.5. Now what we're going to want to do for this one is the string version of round count, and in fact it's round count 5.5 comma 1, close the brackets, close these brackets, plus MA. Okay, so if we didn't add this rounding function, it would be like when we do the label, you'd have a bunch of decimals on the label, and we don't really care for all those decimals. But we still want the 5.5 to be a real division there, because 5.5, the difference of 5.5 and 6 is actually a pretty significant difference, right? So we're talking about, not 10%, but almost 10% change. So anyway, that's that. Now let's go ahead and do plt.legend, and we're going to have to do that legend up here on top as well. And plt.show, and that should be it. So let's go ahead and run that and see what we get here. So again, if you're on Python 3 while we're waiting, if you were on Python 3, this whole function here, plotting label string round, needs to be applied everywhere, because Python 3 actually uses what we would expect for division, and it will create decimals out of all of these. And we capitalized PD somewhere. What did we do? Oh, we did it up here. Dummies. Okay, PD, lowercase PD for 3 and 4. We capitalized that. Python, actually we haven't gotten to the plot, so Python probably won't yell at me. So basically what we're testing here is we're just seeing that we can generate an automatic moving average, because later on when we start to develop a strategy based on that moving average, we want to know that we have a decent moving average for all of the companies. So because we already kind of agreed that just a flat 100, 250, 500, 5,000 is actually kind of inaccurate, so we don't want to do that. Okay, so we generated a relative, this is Bank of America, so this was our kind of baseline here. So we have a 100, a 251, a 502, and a 5,023 moving average. Good enough. So we can kind of zoom into a specific spot here. Oh, we didn't share axis. What a big dummy. Let's add that really quick. Comma, share x with ax1. Let's run that one more time, and then after we run it on Bank of America, let's do a test on, let's do Apple next, because Apple should have much larger moving average requirements. So we'll do Apple next, make sure it's doing kind of a dynamic moving average, and then from there we'll translate this to our strategy. So we'll develop a strategy based on the dynamic moving average. So basically to be like if MA1 is greater than MA2 is greater than MA3 and so on. Okay, so then when we zoom into a specific area, okay, much better. Okay, so we can see here that we're at least somewhat interested in seeing further Bank of America, just simply based on the fact that, you know, this run up here was predicted, the drop was good, and then we've got here, and then the slowing down was decent and predicted there. So okay, so we're happy there. Okay, so now let's plot up Apple real quick and see the difference. Apple, or even Google. I'm curious to see Google actually, because I used to be really happy with the Google charts, so I wouldn't mind seeing Google as well. So plot up Apple. Apple have a lot more plots, but our dynamic moving average should be much larger for Apple, yet still be somewhat accurate as far as changing, right? So we wouldn't want to use larger moving averages for stocks that are updated less frequently, because obviously the moving average and any sort of reaction to sentiment would be very slow on a company like Bank of America if we use the same moving averages for Bank of America as we did for our other companies. Right, so Apple is starting with almost 1,000 moving average at 2,500, 5,000, and then 50,000. Okay, which makes sense for Apple, but it wouldn't make sense at all to do this to like Bank of America. Okay, so here's our sentiment readings for Apple. The other thing is, as we go forward, we're kind of ignoring what the actual sentiment reading is, right? So for Apple, for a brief time, we actually started getting into negative sentiment overall, and that was at a time when, yeah, sure, Apple was at its, you know, saddest moments, okay? And then now we get up almost into the fives, and we did for a short term anyways, but then it kind of has dropped down a little bit and then maybe starts to go back up. But as we can see, Apple price, yeah, kind of had a run up right here, and then we saw a price go up, but then now we're kind of dropping down. Okay, so that was Apple, and then we can try again for Google. Just curious to see, so our first strategy I think that we're going to develop is just going to be the moving averages. Okay, so we're just going to look at moving average crossover, and this is going to ignore what the price is at the time, so it'll buy kind of blind to price. And it's also going to ignore what the actual sentiment reading is. We're only going to look at the trend for now. But eventually we're going to want to dive deeper into, well, what is the price at the moment, but then also we're going to want to look at what is the actual sentiment reading. So are we in the negatives right now, or are we in the positives? So here's our Google chart. That kind of bigger and scoot it over a little bit. So hopefully we're not running into my face. And so actually Google has less updates than Apple. We already kind of knew that. And sure enough, here's where the peak of sentiment was, and then it starts kind of dropping down, and sure enough, price for Google did drop down. So we're pretty happy with this chart as well. And we'd be curious to make a trading strategy based on that. And we can see again for Google, it started off at 2, was doing pretty good, starts dropping down, did pass 0 for a little bit, and that was indeed kind of a slump for Google. And then really we haven't come near to the negatives at all since then. So anyway, it'll be interesting to see that, and then also again based on the sentiment reading. So it'd be kind of cool to say, like, okay, well, let's take a stock and only buy stocks that are in positives, for example, or only buy stocks that are positive, 3, let's say. So if the average sentiment for, I guess short-term moving averages, so let's say moving average 1, 2, and 3, if moving average 1, 2, and 3 are above 4, buy that company, right? And so we could do that across all the companies and see, maybe these are the companies that show, monumental change. So that'll probably be the second strategy that we test after the moving average crossovers. And then after that, maybe we'll make a meshing of all of them. So anyways, this is how we can generate a dynamic moving average. The other thing we might want to look at is starting point. So I've already closed the chart, but if you had yours open, you would see that, these other smaller moving averages start, but the largest moving average doesn't start until maybe, a fifth of the way through the chart already. So we'd want to chop all that data off and not consider that data. Okay, so anyways, that's going to conclude this video. Getting kind of long, but did want to show at least how we are going to generate our dynamic moving average, and then talk about kind of how we're going to base a strategy off of that, and then also maybe some future strategy based just purely on that sentiment reading. So anyways, that's going to conclude this video. If you have any questions or comments, feel free to leave those in the section below. As always, thanks for watching, thanks for all the support and subscriptions, and until next time.